Welcome to FXStreet. If you like what we are doing, if you like our videos, please join us on YouTube and hit the subscribe button. If you like what I'm doing, I'm John, your analyst for this video. You can follow me on Twitter at justanalysis1. All right, taking a look here at Polkadot. Polkadot definitely has had some nice bullish movement here over the last week or so, as has almost every other single cryptocurrency. It's setting up for a beautiful bullish breakout. However, look at where it's getting halted at right now. So on the left, you see these kind of squiggly green and yellow blob of area. That's the volume point of, that's the volume profile. And the thin red line where my cursor's at going across the screen here, that is the volume point of control, meaning that that is where the most amount of Polkadot has traded. That's where the most amount of buying and selling has occurred for 2021. That is the exact kind of stopping point on the current daily candlestick. That's where we're finding a lot of pressure. And that pressure, that stopping area, that resistance is showing up as two things are happening. First is you have the RSI forming a bear flag up against the two overbought levels in the bear market, which are 55 and 65. And then you also have this really extended hidden bearish divergence between the price chart and the composite index. So if you look at the peak that formed on September 14th, and then you look at where we're at currently on October 7th, you'll see that you have lower highs, the red arrows pointing down. But then when you look at the respective levels in the composite index, you see the opposite. You see higher highs instead of lower highs. That is hidden bearish divergence. Hidden bearish divergence is a warning that whatever type of upwards momentum and upwards price pressure that has currently happened is under threat from continuing south. Now, the only other thing that really points to there being a good opportunity for price to continue higher is that the optics bands are not in this extreme condition. They're actually relatively flat. In order to really get a clear, look and a clear signal that things are going to go full on bull mode and we're going to just go to the moon and all that silly stuff, we need to see a close on the daily chart complete two things. First, we need to see it position itself where it's above the point of control. So it needs to close above 3468. Secondly, within the Ichimoku system, we need to see the lagging span, this black kind of moving average. It needs to be in a position called open space, meaning it needs to close above the candlesticks, but in a position where if you were to look forward 5 to 10 periods, 5 to 10 candlesticks, it wouldn't intercept any of them horizontally. So in order for that to occur, that has to happen up here at around $39 even. So in a nutshell, $39 even fulfills all of the things that we would need to see in order to have a very clear and established position for a new bull market. As far as the price target that longs would be targeting, I had to just pause the video while I drew that fib expansion, but the ABC move here, that is the fib expansion I've drawn. The first target for longs is in that $57.50 range. That's a 618 expansion. And then ultimately you get to that $95 level. That's where the 100% fib expansion is. If we get a resumption of the selling pressure here, if this move here is going to get halted up against the volume point of control, if this is indeed just a lower high to extend some type of corrective move, then a return down to the $18 to $20 range is the next low before we would see a likely resumption of the prior bull trend. Thank you for watching. Please don't forget to like, comment, and subscribe.